Welcome to the Ag Commodity Corner Plus podcast. It's July 25th, 2025. Welcome.
Hey, everybody.
And this week, we got to talk about that hot topic that we introduced last week. So let's get into it. But before we do, let's look at the summary weekly closing market quotes. And it was a quiet week. I think we stopped the bleeding in the grains for at least a week. But the star of the show remained cattle futures to new highs. And by the way, we had a cattle and feed report out this afternoon, as well as the semi-inventory report that we didn't have last year. And to me, the numbers look good. Maybe the start of a little bit of expansion, but we'll have to see what the market does on Monday. As we traded to new all-time record highs. It's almost a record high every day. And we highlighted milk because milk actually traded to new contract lows because of a very bearish USDA milk report. And then, of course, broken record with the stocks. Stocks continue to trade to new record highs. The Dow's not quite there. It's close. But both the S&P and the NASDAQ traded new record highs. The S&P 500 traded above 6,300 for the first time and closed the week above 6,400. So very strong, gaining confidence in strong earnings again and U.S. Trump trade deals. All right, let's start off with this hot topic, this U.S. corn pollination problem.
Well, Mo, let me start by asking you a question because you've been doing this longer than I've been doing it. I'm not sure if you've come across this issue before, the experts that we've been hearing from.
No, actually, I've done so I used to do a U.S. crop tour, more like a pollination tour. There was no science behind it. I actually did that for, it's been a while, but 10 years, if not more. And I did 13 states. If I was still doing that, I think our photos and videos would be going viral because I'd be stepping into fields with farmers and showing everybody how bad of an issue this is. So I think the Pro Farmer Crop Tour in mid-August is going to have to do that instead of me. But I've done an Ontario crop tour for the last 10 years, and we've never seen this. So this is something new. We're into uncharted territory, as Fred Beal stated to me this past week.
It seems to be hitting and growing in terms of its coverage across the U.S. and into Canada. So currently we've got, I believe, 13 states more, if not more, that's been hit by tight tassel wrap. That's what it's being called. So the big ones, Iowa, Illinois, Indiana, all being affected. We're seeing that in Ontario as well. And this map here shows the coverage of some of that, Mo.
Yeah, this is not a very good map. It's from Pioneer. It's hybrid specific, but there are some brands that are, showing this problem. And we're finding it in the eastern seaboard. We're finding it in as pollination travels further north, as we get into the U.S. northern plains. We're finding it in Michigan, Wisconsin, Minnesota. We haven't found it in South Dakota, North Dakota yet. Found it in Ontario, according to our chief agronomist to our tour here in Ontario. So it is a problem. They're calling it rapid growth syndrome from what we know. And it had to do with the planting date, hybrid, and the conditions had to be perfect for this to happen. And you get that central spike in that tassel's having a difficult time releasing itself from the wrap of the leaves, and it's causing pollen issues. And you can see from our first photo that once you lose pollen, you lose yield. And because this is so widespread, I think we've lost yield. Now, the market doesn't care at this point because it's too hard for them to understand how bad of a problem it is. At some point, the USDA is going to have to tell them, but that's down the road.
From one issue to another, it seems like tar spot and southern rust is affecting all those corn growing areas. So southern rust has now been confirmed in 15 U.S. states with heat and humidity this week, along with strong winds. It's crept as far north as Iowa, reportedly. And tar spot, which can rob yields, is hitting yields also in Ontario. Again, question for you, Mo, also going back to the crop tours you did. Any advice for the farmers at this point?
Unfortunately, in the last 10 years in Ontario, the crops have been pretty clean up here, but farmers are experiencing tar spot as far up as Belleville, which is middle of Toronto and Ottawa region, so it is traveling further north. I know the Dakotas, there are some spots in the Dakotas, but it's traveling there as well. It's going to travel at some point up into North Dakota. Look, guys, I know prices suck. I know it's $4 corn, and it's hard to keep throwing money at these crops, but you have to chase yield. And if you have a pollen problem on top of a high nighttime temperature problem, on top of a disease problem, this gets ugly very fast. And I don't know if you guys know this, but fungicide, by spraying a fungicide to protect you from these diseases, it can keep that corn crop cool at night. So just something to think about. We would still highly recommend a fungicide application. Common rust is not as bad as southern rust, but if you get tar spot, and if you want to take that risk, you can. But if it's in your area, we would not take that risk. We would spray. Why? Because you can lose as much as 80 bushels an acre.
Moving on, and all of these issues, like you rightly said, could be weighing on the U.S. corn yield. So earlier, we were looking at, given the current cropping conditions, of corn yields that could climb upwards of 185 bushels per acre for the U.S. corn crop. Has it come down more? Is it more like a 179 to 185 as of now, do you think? And what do you think that's going to do to new crop futures?
Well, we've suggested that reasonably we could have lost maybe 1% to 2% of the corn yield because of the pollen issues. The market has factored in a 185 to 190. In fact, Ag Resource is at 191. There's a lot of private estimates in the 187, 188. So again, if you're subtracting 1% to 2%, where do you take it from? Do you take it from the 181, the 183, 185, 190? So, and then do we have a good August? Do we compensate and maybe have a good finish versus last year's dry finish? So it's still a big question mark. I would think, again, with the USDA August 12th crop report, what does the USDA do? You got to think that they go to 183 at a minimum. Last year we were at 183.1. We won't know the extent of these problems until we get into harvest, unfortunately.
Does it look like a bottom in that chart, the new crop December corn chart?
Yeah, the good news is the silver lining is we may have put in an early July 14th 407.5 low on December 25 corn futures chart. You could see that we've rallied. We've tested the 430. You got to go back. There's a little bit of a gap there at 430. And I think over time, again, the silver lining is that the funds have stopped selling. That's a good thing. And I don't think, because we've priced in such high expectations on yield, I don't think we're going to retest the 385 low from last August. But, seasonally we can move lower. So I think that these trade deals are supporting prices. They're not helping, but I think they're putting in a floor for corn. Don't forget, guys, join our marketing club. Love to help you make more money. This week, we were one of the first in the industry to tell our members about this corn pollination and the impact and what you should be doing. We're also keeping score on U.S. trade deals and what that may mean for prices moving forward.
Let's spend a minute more on those U.S. corn crops. Looking at the nighttime temperatures, Mo, you've been speaking to some of those experts. The nighttime temperatures as of now in Iowa looks to be 75.9 Fahrenheit, Illinois at 78.5, Nebraska at 75.4, Indiana supposedly at 77.8, which all seems to be kind of high, Mo, and should be a concern and should be stressing crops. The the optimal range, unless I'm mistaken, should be 62 degrees to about 74 degrees, which in Celsius would be 17 to 23 degrees. And this actually leads to increased respiration and reduced grain fill.
Yeah, so don't get confused about this. The market is, again, throwing a lot of noise at you. And yes, this is a problem. We haven't seen this in a long time, but it's only the month of July. High nighttime temperatures matter the most in August during the milking stage. We're not there yet. So the fact that the weather looks cool into the first week of August versus the extreme heat we're seeing now, and wet again, means that we may be okay as we enter the month of August.
Let's get into the other bit of news that's been affecting markets this week, and going back to those trade deals. So this week, the latest was the US-Japan trade deal with tariffs on Japanese autos lower to 15% from 27.5%, while other duties will drop as well as of August the 1st. Japan has agreed to Japanese government loans and guarantees totaling up to $550 billion in the U.S. in several sectors. But as far as ag is concerned, it seems to be status quo with not a lot of change. They're already one of the biggest buyers of U.S. ag.
Yeah, some were throwing around $8 billion for U.S. ag. Well, the problem I have with that is that in 2023, Japan bought $12.1 billion worth of ag. So this is not a game changer for U.S. ag, although Trump did say it was a massive deal. Maybe on the AI side, where Japan looking to spend $550 billion in the U.S. Look, there's two trends unfolding here. One is that there's going to be a base minimum tariff no matter what type of deal you do with the U.S., so 10 or 15%. And secondly, if you can spend some money in the United States like Japan did, like the Middle East did, you're going to get a trade deal. So other countries need to learn from this because that's what Trump wants.
And also, Mo, there was that the Bangladesh deal where they have agreed to buy U.S. wheat to the tune of 700,000 metric tons and growing into bigger amounts next year and the year after.
Yeah, but this is not a game changer. They represent 3.2% of world wheat imports, so quite small.
Let's stick with wheat and look at the latest, or rather this year's U.S. spring wheat yield tour by the Quality Council in North Dakota. So the council projected North Dakota's hard red spring wheat yield at 49 bushels per acre, and this compares to last season's 54.5, so a sharp drop there. And the projection is also lower than USDA's 59 bushels per acre. The 5-year average, Mo, is 44.6 as far as the tour is concerned.
Yeah, this news is noise. It doesn't matter. In fact, today, spring wheat futures closed at new contract lows. So wheat cannot find any friends. I'm hoping that perhaps once we get past the U.S. harvest, we get into a sort of a post-harvest situation in September, that we can maybe start to rally, depending on how big that Canadian Prairie's wheat crop is. I'm concerned because the rains there have been spotty. So I know the durum crop in some areas are not even worth harvesting. So we'll have to wait and see if we can make the turn here.
Let's go a little further north and look at the Canadian crop situation. So AAFC came out with their latest crop balance sheet. And the start of the show expectedly was canola. So they dropped canola ending stocks from 1.85 to 1.1 for the new crop, which is 25-26. It does look like they'll have to reduce exports owing to not a lack of demand, but owing to tighter supplies.
Look, guys, ending stocks at 1.1 for 25-26 match 24-25. Are exports actually going to fall 37%? I don't think so. And I think production's probably going to come in lower. I doubt, because of the spotty rains, that you can produce an average crop of 40 bushels. I mean, in this report, AAFC went to 17.8 on production versus 18 million metric tons. So with lower production, I got to think that we're going to have to ration demand. I think this report put a floor in on futures at 700. And once we get through the seasonal lows past September, I think we can rally and get past that resistance at 750, 760. And our target of 800 to 850 is the high on the street, but I still think that's where we're headed.
Let's take a look at the shakers and movers in the market, and as has been the trend since the last couple of years, it's AI again. So Google came out with their earnings, which was better than expected, but the bigger news was their expansion into generative AI and also further investments into it.
Yeah, so remember, Google was going to spend $58 billion on AI at the beginning of the year. Now $85 billion. Now they're saying that in 26 they're going to spend even more. So this is this is still early innings in the whole AI theme. It's very bullish NVIDIA, stocks like AMD. So and the big tech. So Google reported, but the other big tech companies like Amazon and the others do report late next week.
Let's finish off as we usually do with the CFTC update. This is as of the 15th of July. We'll get another update today, but as of the latest, we are net short corn almost minus 175,000. Soys are upwards of minus 32,000. Chicago wheat over minus 60,000, whereas in canola, we're almost net long 109,000 contracts.
Yeah, again, the silver lining here is with corn. You can see from the chart, they were short 203,000 as of 07, 08, 25, but then they reduced that position. And, you know, after this week's performance, a little bit of that rally from the low at 407.5, I got to think they're short 150,000. That's not a massive short position for this time of the year. So, you know, they could quickly remove that within 3 or 4 days. So don't forget, going into next week, we've got month end. So, you know, it depends on the commodity. If you've been rallying like cattle, maybe the funds decide to take some profits and reduce that long position. But if you're in wheat and you've got traded to new lows, maybe the funds decide to take those profits in those short positions and drive the price back up. So thanks for watching. I wanted to just end with some don't forget about the Ontario crop tour if you're from Ontario. Pretty soon we'll figure out whether we have a big pollination issue here in this province as well. But love to see you on tour or at one of the final events. And then I just wanted to end with this. Today's reminder, the most valuable asset you own isn't money. It's your ability to think clearly in a world designed to confuse you. We had a lot of noise thrown at us this week. Again, this whole corn pollination issue. Mental clarity is wealth. So understanding and being able to sift through that noise is critical so that you can make better marketing decisions. Thanks for watching once again. Take care, folks. Have a great weekend.
Bye, guys.